Hi, this is Paul Prescott for Norstar Trader. This is our weekly look at the ETFs, looking at the indices, the Spider, the Dow, and the QQQ. So first up is the Spider. Now I like to go back into a little bit of history here, just to show you how easy this trade really was. This is the COVID crash right in this section here. Now, if you remember the rules from a previous video, the yellow line is the bull-bear line. As long as the stock is above the bull-bear line, you stay in the trade. When do you get out of the trade? Well, when the stock crosses below the bull-bear line and the NMAC cyan line crosses below the zero line, that's the time to get out of the trade. So where would you be getting out? Well, right about here would be the place to get out of this trade. It would be this candle right here. It closed below, closed below the bull-bear line, and the cyan line is below the zero line. So now, it bounced off of the termination line, came back up a bit. We were waiting for the NMAC to cross positive again, meaning that the cyan line crosses over, the fast line crosses over the slow line. That did not happen, so you stay out of the trade this entire time until when? Until the fast line crossed over the slow line. So the first place to get in was on this candle right here. Now you can see this was a low. We didn't know it was a low at the time, but then we got the higher low. So as soon as you get the higher low, you know you're pretty much good to go. So you could have either gotten in here or back in over here. But since the NMAC crossed over, that was a good place to get in. Now let's see what type of gains you would have gotten if you got in here, because the NMAC was positive and crossed back over the zero line and stayed over the zero line until the price got back over the bull-bear line. And remember, once the price is over the bull-bear line, you stay in the trade. So we're in the trade, and we can stay in the trade for another year, more than a year. What kind of returns could you have gotten? Well, you would have gotten in on this candle, and you would have run it up to around this candle, and what do you have? About 82, 83%. It's a pretty good return on your money for a year's worth of work. So this is short-term investing. As you know, this is not day trading. We don't care about day trading. We don't look at day trading. 92% of the people who day trade lose money. So we don't really want to be part of that bunch. The odds are against you. I mean, there are some people that did very well, but it's 8%. We like to stay with the momentum. And we find that this bull-bear line keeps you in the trade for a long period of time. We want to try to keep you in the trade as long as possible. It's still trading. You may have to trade more than once or twice or three times a year. So it's still called trading. It's still short-term trading. We like to call it short-term investing. So there are tax consequences involved if you're jumping in and out. You're not holding this stuff long-term. But the S&P 500 turned out to be a very long-term trade. So you have done very well there. Now let's take a look at the Dow, which we would use the DIA ETF, which represents the Dow stocks. And we'll zoom in on the COVID crash here. Same thing happened here. She pierces through the bull-bear line, and the NMAC crosses below the zero line. See, that's unlike here, where the NMAC crosses below the zero line, but we're still above the bull-bear line, so you wouldn't be getting out there. You need both things to happen. So you're out here because both things happen. The NMAC is below the zero line, and the price is below the bull-bear line. And now you stay out of the trade. Why? Because the NMAC is still below, the fast line is below the slow line. We're waiting for this cross now. This is where we get back in when it crosses. That would be on this candle, very similar to the S&P 500. Here's your higher low. If you wanted to wait for the higher low, that's always a good thing to do when you have major sell-offs. You wait for the higher low, and that turned out to be there. But you could have gotten in here, which is similar in price. And let's see how well you would have done. On the Dow, you would have gotten about 69%. That's a great return. And the last one I want to look at is the QQQ. QQQ was actually fared a little better than the other ones. They didn't sell off as much, but let's see. Using the rules, where would you get out? Well, it closed above the bull-bear line here, And remember, these lines aren't, if it closes this close to a line, right on it, Imagine the line to be more of a zone instead of a hard line. This is too close to get out. This is too close to get out. So you wait, you wait, you wait, you wait. Actually, that's the place that you'll be getting out. Why? Because it closed below the bull bear line, and the fast line on the NMAC is below the 0 line. So that's the place you get out. You ride it down a little. It rides down a little further without you being in it. And then you want to get back in right around here. This is where she's crossing back over fast line over slow line. So one of these two candles would be the place to get in. That takes you up, right? You're in this green channel. That takes you up above the bull bear line. Stay in the trade, and you're going to stay in the trade until we are here today. That was from March of last year till now. So let's just take a quick calculation here, and we have a 110% return. Not bad. So we have 110% return on one, 69 on the other, and 83 on the other. For me, that's the way to trade. I don't need to make more money than that. I don't need to day trade and risk everything and jump in and out and then miss out on opportunities. We're trying to keep you in the trade as long as possible. So do your own due diligence, but you're free to use this system. The link is on on this video. Brings you to the website. Hit the like button, helps us out a lot. And next week I'll come back and we'll just take a look at where these indexes are. We'll just take a look at them once a week and just see if we at Norstar will be in or out of the trade.